Hey guys, Steve here from theturtlefollower.com with the stock market outlook video for this week. Hope you guys enjoyed the weekend. Hope you had a nice, relaxing, recuperating weekend to get ready for this week. We're going to be looking at the four indices that we always look at: the ES, S&P 500, the NQ, the NASDAQ, the YM, which is the Dow Futures, and the TF, which are the Russell Futures. Try and get an idea of where we may be headed this week. We had a bounce on Friday in all of the indices except the Russell. And sure enough, I think that kind of leads us to potentially having some higher prices, at least during the start of the week. If you look here on the S&P Futures, you can see that we've been in an area of progressively higher or lower highs. So you can see here the high has continually gotten lower, all right, until Friday, where we finally actually put in a higher high and a higher close than the previous day. So that was the first time that had changed pretty much all of last week, going back to the 9th, which was last Friday. As far as what this indicates to me is with these bottoming tails here, where the price moved down but couldn't sustain lower prices, what I think is going to happen is we potentially are going to move higher and potentially test this trend line here, this downtrend line that's been intact. And the commentary is going to be the same pretty much for the major indices, the ES, the NQ, and the YM, S&P, the NASDAQ, and the Dow. And the pattern is almost identical in all of them. All right, so we had these lower highs, progressively lower highs, finally got a break above. Looks like now we may be able to sustain or at least trade against. We have a price here of 1845. That's the lowest close we've had. And look at where it goes right back to. It goes back to these low closes back from the end of April and beginning of May. So definitely some correlation between the chart and where we stopped. Now, as far as where we go, I think on the S&P, again, head back to that downtrend line. You could see here we are going to, excuse me, I'm coming down with a little cold, I think. We're going to potentially test this 1900 level. That's going to be our first area of resistance. Then the downtrend line. And what's happening is you could see the 50-day moving average is going to start to curl over and start heading in with a negative slope. Just because the average of the last 50 days has moved lower. So now this average has to catch up. So three potential areas of resistance: 1900, which was this previous low back from the middle of August, this downtrend line, and then the 50-day moving average. So we're going to take one at a time, see if we can maybe get some closes above each of those. And I think what would be the best case scenario would be is if we moved higher, test, like say we move higher, go through 1900, test this downtrend line. Instead of reversing immediately and coming back, if we could put in some time there and get a little consolidation and set up a breakout higher, that's going to be a much better scenario for an eventual break of this 50 and move potentially maybe to new highs. But for right now, that's a long way away. Right now, we want to just stop the bleeding, stop it from going down. I think right now, if we can break this downtrend line, we're in good shape. NQs, the NASDAQ 100 index futures. Okay, so similar situation as the S&P. You could see those progressively lower highs. Okay, lower high, lower high, lower high, lower high, lower high. Finally had a close above. Now, this one, similar to the 1900 level in the S&P, this one came right up to this 3850, which was some decent support that we had going back again to the middle and end of July. So we came right back up to it. That's where we kind of sold off. I think, again, we want to move towards that downtrend line. First, we got to break 3850. Then we have to move to the downtrend line, maybe consolidate at that point for another move higher than the 50-day moving average. Now, I don't have it on here, but I do think that a lot of these lows came right around the 200-day moving average of most of these indices. So that's also a nice little support area we've tested in the past and has proved to be some good support. Now, if we look here on the weekly charts, okay, the linear regression channel is in place. You can see that we've come back in to test this second standard deviation move. It did retain that move, okay, so you see the tail below it, but we closed above it. And look at the last few times that we've come in there, especially on the NQs. Came back down in, and that led us to a nice 6-month rally. Came back down in, led us to a nice 4-month rally. All right, so now we're back down to it. This could very well be a great starting point for the next rally, another 6 to 8 month rally. But we have a lot of technical resistance to move through, and a lot of people that are looking to sell at higher prices because they have losses. So this is going to take a little bit of time to get through, but I don't think we're going to see that V-shaped reversal we've seen in the past. I think this is going to be a little bit more of a methodical move back to hopefully higher prices. But for right now, again, 38.50 downtrend line, 50-day moving average are the three areas we need to contend with. The Dow Futures, you can see here, this one was a little different. Again, similar to the other ones. The highs were lower, finally got a higher high, and it closed. This one, the difference was we actually closed above the 16,230 level, which I had been indicating as significant support that became resistance. So we did close above that. So now on the Dow, a little bit of a different story where we only have to really contend with this downtrend line and the 50-day moving average. I would not be surprised to see most of the indices come back up another 3 to 4%. Maybe not this week, but before we actually hit some significant resistance. The Dow, I'm looking at another 200 points higher, right into the 16,500 area, and that's where we kind of hit the backside of this uptrend line and the downtrend line at the same time. At that point, that's where I'd want to see us consolidate instead of reverse lower for another move higher. So those three pretty much all the same setup. The difference with the Russell was actually showing relative strength compared to those three for earlier in the week, and maybe it preluded a move higher or not. But the fact with the Russell is we actually closed lower on Friday when everything else was moving higher. But the difference being that we had 4 days of higher prices before that, so it wasn't surprising to see that one sell off. Again, you could see on the weekly chart, this came right back into the second standard deviation move, which should retain 95% of all pricing. And now it looks like we got an open green candle, which we haven't had in the past. So right now with the Russell, what I'm looking at is maybe this is where we want to move sideways and then break out higher again. Now it did break down from this symmetrical triangle pattern, moved down all the way down, tested 1038, and that's where we rallied from. And you can see now we're at 1079. So a nice 40-point move in a $1,000 index is a significant move, about 3 to 4%. So what we're looking at now is, again, we did put in a lower close yesterday or Friday, but now I want to see potentially move sideways. I would like to see it eventually get up to this 1100 level, and that really where it would move sideways to set up its move higher. And again, you could see this 50-day moving average moving lower and this previous uptrend line. So I wouldn't be surprised these two will cross, and that could be an area of significant resistance when we get to it. The difference with this one, obviously, is this one has moved sideways compared to the markets in the last a year and a half. If we go out to, let's say, a 5-year weekly chart, you can see that the way this set up is the last time this did this, and I don't know if this is happening again or not, but consolidated for a good portion of the year. All right, tested that second standard deviation move, and then it looked like it rallied higher. So you could see here just as similar as the way we take our setups in stocks. The breakout from consolidation led to a nice move higher. Let's see how much that was. about 49% move higher. Okay, from there, from where the yellow line is. And then now it's again setting up that consolidation again. Did have some little bit of a breakdown, but that may be a false breakdown. Maybe it moves a little bit lower, but this could eventually be setting up our next rally higher. So as much as these pullbacks are not necessarily great for the P&L, they're very necessary for the longer term health of a trend. For right now, very short term, we're probably going to have some resistance and some a little bit of a tougher time getting back to those highs. But when you look back at a 5-year chart, you could see that this could potentially be setting up the next year or so of a good rally coming up. So again, I hope this helps you guys. Again, we don't take any trades based off of market action, but it's nice to see where the market may be headed, and just so we know if we have the wind at our back. So right now I'm playing this as that a bottom is in, not necessarily the bottom at this point, but we're going to start looking for some long plays. We went over, if you didn't watch the weekend update, please do so. We went over about 20 to 25 stocks that are setting up nicely, very strong stocks, holding up well in the face of a market correction. And those are the ones you want to be in. Those are the ones that are going to hopefully outperform when the market does turn around and start moving higher. So definitely get over to check that out. Have any questions or comments, please leave them below in the comment section. Hit that like button, and follow me, Stock Twits, Twitter, Google+, subscribe to the YouTube channel, and subscribe to the nightly recap on the website. Thanks for watching, guys. Have a great rest of the day, and we'll see you tonight for the strategy session.